And here we are. Welcome to all of you. Thank you very much for joining our webinar, The Solar Success Chain, Linking Owners, Brokers, and Insurance. Good afternoon to everyone on this side of the Atlantic over in Europe, and good morning to everyone joining from North America or Central and South America. It's a pleasure to have you all here in this incredible webinar as we are getting closer to the end of the year, but also starting to look ahead for next year, one of our flagship events, Solarplaza Summit of Asset Management North America. As I mentioned earlier, we have this incredible webinar coming up on the solar success chain, linking owners, brokers, and insurance. And it's a wonderful experience as we actually have guests representing all sides of the value chain, both carriers, brokers, and even developers. So I think we're going to have an incredible discussion coming up, and I will be giving you some instructions. But first of all, let me go a little bit through the agenda and the people that you will be seeing at our webinar today. First of all, from our side of Solar Plaza, it's a pleasure to meet you all. My name is Jose Miguel Polanco. I am a business developer for Solar Plaza over here in the Netherlands. I'll go a little bit more deeper into our company in a little while, but also presenting today, we're going to be having Lauren Carroll-Allan, the Vice President, Senior Account Manager of CAC Specialty. We're also going to be joined by Kate Brandus, the Director of the Asset Management Team for Sol Systems. And finally, we have Geoffrey Lehv, Vice President of KWH Analytics presenting. And then we will be finishing our webinar with a general Q&A. First of all, an introduction into Solar Plaza. Our main mission is to positively impact the world by accelerating the sustainable energy transition. And we have actually been doing this for 20 years now. We are in our 20th anniversary year now in 2004. So really, it has been incredible to celebrate all the accomplishments that the company has been able to do in these last 2 decades with events all around the world, spanning North America, Europe, Asia, Africa, in exactly 51 countries worldwide already, with more than 230 events spanning all types of topics from solar to storage, recycling. Really, it's incredible all the different events that we do throughout the world. And important to note, even though we're based in Rotterdam, we do this globally with a network of over 60,000 solar PV professionals. So we invite you to check out our website, www.solarplaza.com. Also visit our new platform that we have available for our complete network, and there you can revise all the different events that we have for the remainder of 2024, but also gradually already launching our events for 2025. So just to go on a little bit more in detail about this flagship event that is coming up, it will be our 11th edition of Asset Management North America. It is an incredible conference which will happen in San Diego, the 23rd and 24th of April. So tickets are already out. So make sure you visit the website. We also have our program ready. So in case you have anything to revise about this, you're always more than invited and welcome to contact us here at Solar Plaza. And now moving on to practical notes for this webinar, because I'm sure you guys are very interested in also sharing your comments, sharing some questions that you have for our presenters on the day today. If you have any questions, you can use the question box that you find here at our platform, and we will be answering them after the presentations. So make sure you write in your questions. If it's a question specifically for one of our guests, please make sure you also specify who the question is for, and we will make sure to have all of these noted down and answered at the end in our Q&A session. Also, if you have any technical issues, you can also use that chat box, and our support team will try to help you out. We will be here revising the chat in case you have any issues. And of course, I am sure you want to take all this incredible information that you're going to receive today. So just so you know, the presentation slides and the full recording of this webinar will be available afterwards, generally from 1 to 2 days after we're finished. So you will get it during this week. In your email, you'll be able to access the presentation slides and the full recordings. So having said that, it is time now to meet our 3 guests for this incredible webinar on the solar success chain. So I'm going to start off first by introducing Lauren Carroll-Allan. Welcome, Lauren.
Hi, really glad to be here. Thank you so much. My name is Lauren Carroll-Allan. I am a Vice President and Senior Account Manager with the Power and Renewables team at CAC Specialty. CAC Specialty is a integrated specialty insurance brokerage that has added over 1,000 clients in the last few years. We have over 500 employees, and we provide specialty brokerage services across the spectrum of insurance placements. I work specifically for the natural resources team, and within that team, which is the largest team within CAC Specialty, and within that team, I work with the Power and Renewables group, focused on placement and advisory services for renewable energy assets, including solar, wind, battery, hydrogen, sustainable aviation fuel, innovative battery technologies, kind of anything that's coming into development to help move that energy transition forward. We focus on those renewable energy and manufacturing clients. So I also lead day-to-day operations for Cirrus Advisors, which is our risk and consulting platform for early stage project developers. And I'll get more into that later. Thanks.
Everyone, my name is Kate Brandus, and I'm the Director of Asset Management at Soul Systems. A little bit of background about Soul Systems. Soul Systems was founded in 2008 and initially started as a renewable energy credit aggregator and trader. Over the past 16 years, we have expanded and offer a lot of sustainability solutions to help our clients meet their decarbonization goals. This can include developing on-site and off-site solar, syndicating tax equity, and then also offering renewable energy credit options. Um, at Soul Systems, I am on the asset management team where I onboard our projects from financial close through commercial operations. Once projects are online, I make sure that they're optimal or performing optimally and making sure that expectations meet what we expected financially. In addition, in my role, I do work with our broker very closely, CAC, where we think about insurance not only in the operating phase, but also making sure that we're considering it throughout the life cycle of a project, from the development phase all the way through operations and renewing a project. Excited to talk with everyone today.
Thanks, Kate. All right. Hi, everyone. Geoffrey Lehv. I'm representing the carrier side of this conversation today. So I'm at what's called a managing general agent, KWH Analytics. We are historically a data company and have used that data to build out several insurance products. So the one we're talking about today is mostly property insurance with our focus on renewables. And we're excited to talk to you from a very current perspective about basically current status of the market and what we're seeing today. So thanks for joining. All right, I will invite Lauren and Kate to jump back on, and we will talk a little bit about our agenda going forward. So, see if I can control the slides. It seems to be working slowly. Okay, there we go. So our agenda for today. So we're going to talk a little bit about the current status of the solar insurance market. So how we got here, what we're going to focus on solar, what have the impacts been over the last really 5 years. We're going to talk through a little bit. Then we'll get into where and when insurance should be considered within the project development timeline. Little insight into how we see best practices in that regard. We will hear from an asset owner. We're lucky to have Kate. We'll hear from an asset owner about their insurance timeline, so what they focus on when, which can make a big difference. And then we'll close with how insurance carriers can do their part. So I'll hop back on and talk a little bit about how the carrier side of the equation, or MGA's underwriters, can add value. So let's start with where we are today. I'm sorry for the delay in the slides moving. I will try to. There we go. Okay. All right. So a couple things. Obviously, we have extreme weather events that have heavily impacted the PV solar industry. I mean, they have extreme weather events seem to be impacting lots of industries. I think in solar, there's two things that we want to look at carefully. Really, we want to understand the quantification of that risk. So yes, there's increasing frequency of major loss events associated with insurance claims, but there has been some increased severity as well. So can we deal with each of those maybe independently is the idea of part of this discussion. To give a sense of some of the events and some of the tightening of terms, so to put some numbers to it, pre-2019, we think of solar property insurance as fairly abundant, available for most projects throughout the United States. I think as of there were some large events that occurred. We'll talk about it in the next slide, actually, but some large events that occurred to disrupt that that led to a tightening of terms. So losses hit the industry hard between 19 and really even through 24. To tell you the truth, the tightening of terms means that there have been significant premium increases. But when I say significant, 3x to 5x premium increases for some projects, depending on siting. Deductibles going up to 10 to 15% of the property PD limit. Hail coverage caps have been implemented as well. We call them sublimits, but you could look at a sublimit of $15 million to $40 million, sort of regardless of project size, today in certain locations, and that leaves owners and financiers of large assets exposed to these risks. Oh, sorry. All right. So what does that? What are some of the events, and what does this mean? Where are they occurring? So in 2019, there was a project near Midland, Texas, which had an outsized impact on the industry. There was about 70 to 80 million of damage, about 58% of the modules at the site. It was close to 400,000 modules at this site. It was hail related, and the reason there was such a large impact is that the way that we quantify risk in this segment is we look at the probable maximum loss. So we look at PMLs or PML studies. And the probable, when there is a damage event or a loss event that significantly exceeds those PML studies, that is concerning, of course, and can constrain the industry and the availability of insurance. There was another similar event. So in March 2024, just earlier this year, there was a project near Houston that sustained. This was another hail loss. We're not sure of the total damage yet, but upwards of potentially 50% of the construction cost. So potentially in the hundreds of millions. And one thing I wanted to note on this is that we're not just talking about transfer of risk, right? So with these solutions and what we're going to talk through today, we're not just talking about transfer of risk. We're talking about avoiding risk or severely mitigating risk, which is where there's value. Much like the financial sector, and I come from the finance side, we stress test these assets through modeling of these probable and maximum losses, and these studies are evolving. And we may still underestimate potential damage, but historically that's been due to, I think, most recently underestimating the size of hail. But the more information we get, the better data we get, and the more we are able to back test and stress test, the better we can mitigate this risk and reduce the cost of insurance associated with it. Jump to the next slide. All right. So we're talking about here SCS, or severe convective storm. That is the main insurance peril affecting the solar industry. It includes hail, tornado, straight line wind. The impacts there are mitigants. There are very effective measures that can be used against hail. And there's also some other perils you'll see. They're less impactful but still significant. Brush fire, equipment fire, hurricane or named windstorm. These are sort of the perils that are tending to drive the industry. The good news is that, a combination of measures, so hail stow strategies, reinforced modules, careful siting, appropriate insurance, we can actually build out we have the ability to build sustainable, profitable projects. It's really about the communication amongst these counterparties, or the what we'll call the insurance success chain that we're going to talk through today, about how you do this effectively. So I'm going to turn it over to Lauren. She's going to talk about creating the solar insurance value chain.
Great, thanks, Jeff. Okay, let me move this forward. Waiting. I feel like I'm still in control here. There we go. Okay, I clicked a bunch of times, so hopefully it doesn't do that thing where it jumps forward like 15 slides. Okay, so we're going to talk about current state. There are a lot of different parties involved in the placement of insurance for a project. And this is honestly probably changing for a lot of people. So maybe it's recent past state more accurately at this point. But there are a lot of different stakeholders, and the communication channels are usually happening kind of one at a time, linearly. There's not a lot of communication between these stakeholders. And what we saw, in the past is that insurance was something that was kind of thought about at the last minute. As Jeff said, not that long ago, it was very easy to get insurance at a reasonable price. For a long time, the market has corrected significantly in the renewable sector in the last few years. And so people would get to a financing and suddenly run into a lot of roadblocks with insurance, either not able to get the limits required by financing parties, or the cost was significantly higher than they were expecting. So, this is the scenario that we want to start to undo and correct as the broker, as the kind of link in the chain between all these different parties, from the project developer to the sponsor, project owner, to financing parties, underwriters. We want to connect all those people together and make sure that we're communicating accurately and in a timely way around insurance. So what we envision for the current state, future state, is a much more holistic way of communicating, where we are providing information early on to developers around insurance, guiding those decisions, communicating innovations on the asset management side or O&M side to underwriters, and then translating back what underwriters want to see as far as best practices, and negotiating directly on behalf of our clients with financing parties to ensure the most reasonable insurance structure for those projects. So CAC Specialty, and specifically our project developer consulting platform, Cirrus Advisors, we focus that platform on talking to not just project developers, but for our clients with robust development arms, also those development practices within those larger organizations, to talk about projects as soon as possible, as soon as siting decisions are being considered, as soon as leases are being signed, definitely as soon as technology choices are being evaluated. We want to get in front of those people and talk to them and work through how those decisions will impact insurance later on. We believe that there are often cases where decisions are made very early on in a project development process that can both negatively or positively impact insurability and pricing, the whole structure of the insurance program. So we provide modeling, engineering advice, insurance market intelligence, and we want to make sure that we're diligencing insurance the same way we diligence everything else in a project, so that at the financing stage, there is evidence that that whole process has been adequately analyzed and evaluated, that the insurance premiums and the pro forma are as accurate as possible, or as realistic as possible, let's say, and that any decisions needed to mitigate specific nat cat risks have been implemented in that process. So we're just trying to improve that whole communication chain to make sure those assets are more resilient over the long term. So, okay, so the role of a broker in this process is really around telling your story as an asset owner to the marketplace. We want to make sure that underwriters are aware of everything that's been done from those earliest stages all the way to the present, and plans for the future around how those risks will be mitigated. We really rely on project developers and owners as the experts on the ground to be helping inform and educate the markets around what works and what doesn't, and also around any innovations in O&M procedures or whatever it is that you're using to protect your asset on the ground. We want to make sure that we are getting that information up to underwriters. Those underwriters, learn that information, they get more comfortable with an asset class or with a new mitigation measure, and then those things can be integrated in as kind of a best-in-class, a way that they evaluate best-in-class assets and differentiate those risks, which makes those risks a better underwriting choice and allows for better coverage, better rates, better conditions, a longer-term relationship with those underwriters, which just improves the whole system over time. So that feedback loop becomes productive, relationships develop, and we see that as the best way forward to continue these improvements. So a question we get asked a lot that I think Jeff will go into some later as well is, how do we evaluate the cost of additional investment in mitigation measures against insurance premiums? And unfortunately, it's very hard to provide a simple one-to-one number that if you spend this much money on this type of tracker or this thickness of panel, you will get this amount of money credited to you in your insurance premium. It just doesn't work that way, unfortunately. However, there are a lot of ways to think about the benefit of that kind of investment in resilience measures. First of all, when you think about insurance, it's not just your insured value that you need to think about. There's the deductible layer that obviously must be paid out before any claims can be paid by the insurance carrier. There's your insured layer, and then there's the uninsured value above that if in the case of sublimits, if that happens. So for example, if you have very high hail exposure and you're only able to get $25 million worth of hail coverage in the market, but your modeling shows that you have another $20 million of potential risk above that, that's something that must be considered. So, investing in those mitigation measures, telling that story, becoming a best-in-class risk, developing those relationships can help in negotiations with lenders to set a reasonable sublimit, ideally to lower that, sublimit requirement for your policy, and which is the lowest, is the highest driver of insurance costs, is those sublimits that you have to buy, and any excess coverage that you might have to buy on top of that. The resilience measures, in bringing down your full exposure may reduce that uninsured value amount at the top. It can also reduce the amount of smaller claims that may impact your project, and therefore fewer deductible dollars that you may have to pay out. If you have fewer claims over time, the risk profile of that asset improves and improves and improves year over year, which can result in lower rates, better terms and conditions. So it's really you have to look at it holistically over the life of the project, not just in a single year, a dollar-to-dollar comparison of that investment. So we really do feel like these mitigation measures have value over time. Next. Okay, I'm going to turn it over to Kate.
Thanks, Lauren. Over the next few slides, I'll talk about how the owner-broker relationship has really evolved over the past few years, especially since 2019, as Jeff was mentioning, and talk about how this relationship has really impacted some of the decisions that Sol Systems, as the owner or developer and long-term owner of assets, some of the decisions that we've made. All right, so due to the changing industry and a lot more Nat Cat events happening in the market these days, owners and developers need to start thinking about insurance at the inception of a project. This really starts with site selection. So as soon as a developer is considering, okay, do we want to buy this project? It's important to engage your broker and run a serious report to evaluate how prone the site is to certain natural disasters. If you get the report back and it's really in a hail, wind, or whatever the event is, exposed area, then you might not want to proceed with that site. If a project does pass site selection, then the next step is design. You will also want to engage your broker on the design of a project. So there's a lot of different equipment decisions that a developer needs to make, modules, inverters, trackers, etc. And your broker can help you run reports to evaluate the AAL and PML associated with these different modules or with these different models. AAL is average annual loss and PML is probable maximal loss. So associated with these different equipment, so you can evaluate that versus the CapEx and kind of help you make these decisions up front. Once you are starting construction on a project, that's when you'll bind the builder's all risk or BAR policy. So this is just property insurance during the construction phase. And then also during the construction phase, hopefully not, but you may also submit claims as needed during construction. And then once a project is mostly complete, reaches substantial completion, that's when you will switch from BAR to OAR. OAR is operational all risk, so it's just property insurance during the operational phase. And then after that, your touch points with insurance will decrease a little bit, but you will continue to run an annual renewal process, and you'll want to engage closely with your broker on this. They have several touch points with insurers and know what insurers are looking for in bids so that you as the owner or asset manager can prepare the best bid possible to get the best rates possible. And then obviously as needed, if there are any claims, then you would run those during the operational period as well. All right. So the timeline I went over really shows how developers and owners are starting to think about insurance a lot earlier in the process. This is important, obviously, to get the best insurance rates possible, but it's also important for resiliency of the project. Owners really need to be thinking about throughout the development process and throughout the life cycle of a project, what are the measures that we can take to make sure that we're making sure that the site is producing optimally and is running as much as possible. So as I mentioned on the last slide, first and foremost during the development stage, working with your broker to run those cirrus scans to see how prone a site is to certain natural disasters, and then which equipment is going to fare the best in that site location as well. Something else that Sol Systems wants to make sure that we're doing to ensure resiliency of our sites is focusing on our spare parts strategy. So at the same time that we're assigning the EPC contract, we're also thinking about what spare parts we're going to want to procure. In addition to procuring them up front, we're going to also want to make sure that we do a review frequently to make sure that we still have those spare parts on hand, procure more spare parts for something that we realize we need more of, and less of parts that we think we need less of. This is really important, especially in this world now where we have a lot of supply chain issues and other events going on. You want to make sure that when you need a part that you have it on hand immediately. Something else that we're doing to consider resiliency is severe weather alerts. So we and our O&M providers subscribe to geographical weather alerts. So anytime that there is any type of storm that may be coming close to the site, we get those alerts immediately. And then we've done trainings and informed our O&M provider how to react to those storms, whether it's hail, wind, or whatever, and take procedures immediately to make sure that the site, to mitigate the damage to the site. Another thing that we're doing is making sure in our O&M contracts that we include routine equipment testing in the scope. So making sure that that's in there so that we can monitor the health of our equipment frequently. Another thing that is really important for resiliency is making sure that the vegetation is managed on the site so that it doesn't lead to performance issues. This can be a combination of mowing and then also herbicide treatments on site. The goal is obviously to make sure that vegetation doesn't grow too tall, so you want to keep it below the leading edge of a panel. And also you want to make sure that weeds and other vegetation doesn't get through the above ground cable management. And then finally, something that's really key is choosing the right partners. So you want to choose an EPC that's going to build a quality site and then honor their warranty period. And then you also want to choose an O&M partner that has the resources and the personnel to prioritize your site and really take action immediately if there's an issue on site. Okay, the owner and broker partnership. So as I mentioned, we started relying on brokers throughout the solar life cycle, and it really is a key aspect to a successful project. We like to rely on our broker for a lot of information, but we do also appreciate that there's a feedback loop between us and our broker. We let them know what's going on in the field, and they also communicate that to insurers. I really want to use this slide to talk about how that relationship with our broker has really influenced the decisions that Soul Systems made and provide some examples for everyone to see. So as I've mentioned early on, it's really important to run the cirrus scans to see how different equipment will fare on site. If you look to the picture in the upper right-hand corner, you'll see here that we have a picture of an inverter that's raised off the ground. This is one of our sites that is in a flood-prone area. So when we got those results back, we were like, okay, what can we do here? We still want to build this site. And then we realized that we can raise the equipment and still proceed with the site, so it's a win-win situation that helped us mitigate a potential flood further down the road. And then below that picture, we also have a picture from one of our cirrus reports that is evaluating different module technologies and the probable maximal loss associated with each of them. So, when we get this kind of data back early on, it helps us realize, okay, what's the CapEx of each of these different modules, and what's the expected annual loss that we can expect with each of them, and help us weigh those decisions. Unfortunately, sometimes also we get results back and, we might decide that we're not going to proceed with the project. But sometimes, it's important to get that information up front rather than, proceeding with the project further down the road and then deciding, okay, we can't do it. So it's good to have as much data as possible up front. Your broker can also be valuable in reviewing insurance exhibits. So, insurance exhibits for other types of contracts that we have, they can review those and make sure that the terms in them are market standard. And then also brokers are really helpful to us because they prepare us for the annual insurance process. I talked about this a little bit earlier, but the brokers are working with multiple different owners, insurers, and see a lot of what's going on out there, and can really prepare owners for that process and making sure that what type of information insurers want to see, what their biggest concerns were for the past year, and making sure that you produce the most robust submission as possible. And then finally, I think like a lot of owners, and I think Geoffrey's going to talk about this a little bit, we do sometimes struggle with some aspects of insurance, such as quantifying the dollar value impact of certain measures. Lauren talked about that a little bit. Juggling the varying insurance timelines, and then also navigating the claims process, which can be complicated and take a long time. So with our broker, they really help us navigate these pain points and communicate feedback to insurers to help improve the process and communication between all the parties.
Thanks, Kate. Jump back in and talk from the MGA carrier perspective here. See, we'll grab control again. There we go. All right. So where insurance can help, or where does insurance come in? So yeah, a couple things that are key on this slide. Really, it's the evaluation of risk to the asset, right? So this is the key term. We're evaluating the risk to the asset. As carriers are better able to evaluate these risks, they can offer mitigation strategy recommendations, further reduce the risk, ultimately the cost that's associated with that risk. I think the part that's frustrating is that we're fairly nascent into this industry, right? I did my first solar transaction in 2011 at 5x the cost of a solar facility today. So we've really changed in a very short time period, and insurance was a mere afterthought back then. We are just starting to understand the severity of these impacts, right? So for instance, there's a hail example on the left side of this page showing an average annual loss, that's at AAL that Kate was referring to, reduction of 50 to 70% by having a verified hail stow program, meaning one that was either proven effective or has on this particular site or on similar sites, as well as appropriate modules for the site. So 3.2 millimeter thick glass modules at a particular location. Wildfire is another example. And brush fire, we consider wildfire and also attritional brush fire, so the stuff that might occur on site if there's a inverter failure or other fire. Vegetation management that Kate mentioned. What is their water supply on site? Are there fire breaks? They can have significant impact on the AALs for a particular site. So as we learn more about the severity of these events, and we get more data, we will just be a better position to affect the uncertainty or reduce the uncertainty around the risk we're writing, which usually makes it less expensive. All right, so here's an example. So brass tacks. So this is an example of an asset. This was a solar and battery energy storage asset with clean loss runs. That means that it hadn't taken losses in the past. It was an operating asset at the time we wrote this. It's a big number, a 72% reduction in property premium. Why does something like that occur? Well, couple things were specific to this site. And by the way, we wrote this, which is very common in insurance in our sector. We wrote 10% of this risk. So there were other insurance carriers, underwriters representing 90% of the risk. And they reviewed the same submission or information. What was important here is that there was a really good hail stow program. Hail was the main risk at this site. I know we're talking a lot about hail, but hail was the main risk at this site. There was a really good hail stow program. There were appropriate modules for the site. And then there was actually data on the hail stow, historical hail stow. So I'll talk about it a little bit in the next slide as well. But just looking at that data and understanding that they had both measured the size of hail as well as the effectiveness of hail. So were they able to get all of the strings to tilt to the maximum 52 or 53 degree hail stow protocol? And did they do that effectively? And when did they do it? How early before a storm, et cetera, et cetera? That data, you start to get into the intricacies and nuance of the operations, and that's done very effectively by some operators. In this case, it was done very effectively, and they could show it through data. Just to give you a sense on this deal, if you think over the 35-year useful life, this could represent $20 to $25 million on a $100 million asset, on an undiscounted basis. So this is maybe 15 on a discounted basis, but still, I mean, this is a significant move. So anyway, it can be quantified. All right. building better submissions. We talked a little bit about how you actually do this, and we often get questions on, why it's so opaque. Why can't it just be very clear? We'll talk about that as well. I think the key is that, these are large sites. They're being insured by several market participants, each with their own underwriting criteria, philosophy, analysis. In essence, we're all trying to quantify the risk, and we have our own views of them. So to some folks, it can be worth more or less than to others, and that's usually the big difference. In this case, as you can see, there was really good data on the hail stows, the actual hail events. So this counterparty was stowing a lot prior to hail events, or actually without hail events even occurring. Even during the month of July, they stowed 3x versus the amount of hail events that came. And there wasn't a substantial decrease to output. It really wasn't severely impactful in that regard. But it was very helpful, obviously, for reducing their cost of insurance. And then I will talk about the submissions. So I can talk from our perspective, KWH, in our underwriting. We're a data company. We really care about data. We have over 1.6 billion in TIV of loss runs. So 1.6 billion of losses. Sorry, it's actually not TIV. 1.6 billion of losses in our loss database that we utilize to assess the impact of these perils. That's growing regularly, and the more data we get, obviously, the more effective our backtesting can be, and the more effective our pricing can be. But also, just the market understanding what the main drivers are and starting to provide that regularly is helpful. So for instance, we have an underwriting data checklist where we are asking, this goes to the brokers, it can also go to insureds. And basically, we are telling them what's going to move the needle, what matters to us, what kind of stuff would we like you to provide, and in what format. And then as we mature as an industry, I think this will get better, and other folks will want similar things. They probably several of them already do, and we'll start to really build out more of a correlation between doing some of these mitigants, performing from some of these mitigants, and the impact on the cost of insurance. All right, I'm going to turn it back over to Lauren just to wrap up, and then we'll take some questions.
Great. Just real quick, I see we have a lot of questions coming in. So, on this slide, it says uninsurable assets are unfinanceable. I mean, it's very few projects are going to be literally uninsurable. There's always going to be someone willing to sell you insurance. The question is, how much money do you want to spend on it? And in the case of projects that are, highly nat cat exposed and don't have proper mitigation measures in place, that insurance will become prohibitively expensive and just kind of break the financials of that project. So really, we want to ensure that everyone is playing a part in improving this system, making the feedback loop more successful. Kate gave you some examples of what that looks like with the project that we did some analysis on for her around mitigating flood exposure. We were able to show in an engineered PML report how that brought the sublimit for flood down significantly, which allowed the cost of insurance to come down significantly. We have another client who has built very large projects that are nat cat exposed, but they've invested heavily in resilience measures, and we've made sure to tell their story to underwriters. They renewed their entire insurance program 1 week after the Fighting Jays event this past spring, and they came in with a reduction in overall insurance costs for their portfolio. So it does work, and we look forward to answering your questions. Thank you for being here.
Thank you so much, Geoffrey. Thank you, Lauren. Thank you, Kate. What an incredible presentation. And as you can already see over in the chat box, we have plenty of questions. So given that we have 15 minutes and we have a lot of questions, I'm going to get started so we can get to answering them all. The first one will be for you, Geoffrey, for KWH. The question is, as an insurance underwriter, where would you like to see innovation or more consistent adoption of best practices within the solar space to help counteract losses?
Yeah, so good question. So innovation, yeah, we'd love to see innovation in the glass. So can we simply eliminate the risk by better glass or more resilient glass? I think that's potentially coming, but not here yet. The other one is automated hail stow. So for us, the building in the value of automated hail stow and the historical approach, as you saw in the example earlier. But generally speaking, we want there to be a very quick reaction time between the time that the hail alert comes in and the facility is actually stowed, and hopefully you can even eliminate the need for a human to be part of that interaction. They could review it, but the speed with which you need to react to severe convective storm is really quick. So automated programs becoming more mainstream would be great.
We're going to stay with you, Geoffrey. We have a question from Prasanna from Surya Energy Consulting. Her question is regarding the pie chart in the insurance perils slide. She's asking, what is that pie chart representing? Is it the percentage of loss attributable to each natural catastrophe?
Yes, exactly. But it was based on a dollar value of loss. So it's important to note that there may be lots of events that are occurring that have attritional brush fire, but they weren't anywhere near the damage from as compared to severe convective storm. So it's based on a total gross loss figure.
Perfect. Our next question can be answered by Jeff and Lauren, I would think. The question is, why can't there be more transparency for premium reductions for diligent owners who implement some recommended actions? In the residential home insurance market, I've gotten different quotes for various scenarios and made decisions based on that info. There was much more transparency on that part of the industry, but here it doesn't work that way.
Fair enough. Yeah, I wouldn't say so. I know Lauren said it doesn't work that way. It just is more of a simplification. I don't think she really believes that because she pushes us to get better pricing on stuff. So I would say no. Look, it's not that it doesn't work that way. It's that there are a lot more counterparties with various views, right? So yeah, you can go to State Farm and you can get a quote for 100% of your home. Here it's a little bit harder to get a quote for 100% of a large asset with a big SCS requirement, right? So we're just talking about the impact that SCS can have on losses. And so you need to put, this is why the broker's job is not that easy. You need to put together a lot of those underwriters, and they have differing views. So we need to align better on those views. The only way we align better is when the models get more precise. So can we, like today, we're giving quotes where if somebody had no hail stow protocol, meaning we got a submission with no hail stow information at all, versus best in class hail stow protocol, we give a range and we convey it to the broker, and the broker can decide on factors like that. So it's imperfect. I admit it's imperfect. You can't make a ton of really early investment decisions on equipment necessarily or on implementation just yet, but we're getting there. So I think it is getting better, and we do want to work towards that transparency. So hopefully we'll.
Yeah,
Go ahead.
I agree with that, and thank you for calling that out. Yeah, it is a lot more complex than just it doesn't work that way. Each underwriter has their own internal actuarial and underwriting approach. They have their own risk appetite. They come in and out of different sectors all the time, depending on internal financial decision making. That changes year over year. So there's a lot of stuff that goes on in an underwriting shop that is like a black box to us that we don't get insight into. We're not given insight into. What we get at the end of the day is a final rate and a premium quote for a risk, and perhaps that's a 3.5% line on a placement, and then we have to fill that out with 10 other underwriters in the case of large placement. So it's just a much more complex process. However, I agree, and like Jeff said, underwriters can differentiate themselves by being more transparent, by showing exactly how those rates are established based on different credits and rating bases that they work on internally. And we do push our underwriters to get as much information as we can. However, a lot of the time the answer is, well, yeah, this mitigation measure helps you, but then this other factor doesn't help you. So then they balance out, and this is the rate you get. So it's just it's not as transparent to us either. But I do agree that the industry can do better in that regard, and we are all pushing for that.
Thank you, Lauren. We're going to stick with you for this next question with Rebecca from the Fraser Basin Council. She asked, do you consider wildfire risk when looking at vegetation management? For example, choosing drought-resistant species, ensuring a fire-smart perimeter.
Yes, definitely. Wildfire is one of the NatCat perils that is generally included in the modeling that we do. And vegetation management is of great concern to underwriters in those high risk areas for wildfire. So, yes.
Thank you for that answer, Lauren. Here we have a two-part question. Is the Cirrus scan free to run? I'll ask that first, and then we'll go on to the next one.
Uh, Actually, could you ask the second question as well? And then,
Yeah,
because
sure.
the answer kind of goes together perfectly. Yeah.
Amazing. Yeah. So, in the event that a project manager has completed their own risk assessment for site selection, is the Cirrus report still mandatory? Can you please explain what the scan includes, why that is your preferred tool?
Yeah. So, the Cirrus, we do a risk and insurability report. It is geared at looking specifically at natural catastrophe exposure, how that impacts the insurance outlook for a project, and it's on a project by project basis. And it's meant to capture the risks associated with that standalone project, how the insurance program will look, what the associated premiums may be based on current market conditions. And it's meant to live with that project and be part of a data room and, you know, ideally assist with financing, et cetera. So for our current brokerage clients, such as Kate and Soul Systems, we provide those reviews of their development portfolio projects as part of the overall client service agreement that we have with that client. We also have standalone Cirrus Advisors clients that are usually smaller developers that don't have the benefit of an in-house risk management department or a robust broker that's familiar with the renewable energy space. So they're not getting that intelligence around renewables insurance directly. So we provide that. We become their outsourced kind of risk management consultant for insurance for those projects. So we do those projects for a fee. The standalone report is 15,000. We have for clients that have a portfolio of projects that they send our way, we provide discounted pricing. So it really depends on the relationship. And they're not mandatory, but they're not mandatory. They're not required by underwriters or anything like that. So if you have your own way of assessing that risk, that's fine. But for those who don't have a way of assessing that risk, we offer that service, and we have found that there has been a real gap for those, especially those smaller developers who are making a lot of decisions early on, but just maybe won't even own the asset. They'll develop it and then sell it to somebody else, but they've made all sorts of decisions early on that impact insurability later, and we really want to get in front of those people, especially. So yeah, hope that answers the question.
Moving on to a question from James from the Trinity River Community Solar System. He says, production insurance to mitigate risk of reduced production due to long-term weather changes due to climate change, including increased cloud cover in some locations?
Yes, that is doable. That is a performance side product that actually KWH offers called a solar revenue put. But yes, that is very doable. And what will matter most there is basically how the modeling is considered from the client's perspective. So if you're running an analysis of the performance of that physical attribute at that location, is our analysis similar to the client's analysis. Recently, it often has been. So we'll look at their PV Syst and we'll compare it to our analysis, and then yes, we can ensure the production.
Next question, can tracker hail still work when the power grid is down? Also, what are your thoughts on fixed tilt systems in hail-prone regions?
Yeah, so Stowe needs battery backup in order to work, unless Kate tells me there's something better out there that people are selling her now. But So not really, but yes, there are systems with battery backup, and you can effectively stow. On fixed tilt systems in hail-prone regions, look, you guarantee stow because you're at whatever angle the fixed tilt system is at. So you're depending on what angle the fixed tilt system is at can make a difference. But 2 millimeter thick glass in those regions, we would be a significant factor in the cost of insurance. So fixed tilt systems in hail-prone regions are not ideal. And then furthermore, with 2 millimeter thick glass as opposed to 3.2 or 4s, is also impactful in a negative way.
Great. We still have 5 minutes, so we're going to try to keep going through the questions. This is another two-parter. How do you know you have appropriate information about hail, particularly as climate change is impacting severity and frequency of storms? Are you only using historical data? And secondly, how are success stories, large hail with no or minimal damage, being taken into account?
Lauren, you want to jump on the first part?
Yeah. So as part of our Cirrus report, we partner with VDE Americas, which is an engineering firm. They have a custom hail model that takes into account panel choice, glass thickness, as well as stow angle. They're the only people that I know of that have that level of specificity in their hail model. The other natural catastrophe models we use for named windstorm, severe convective storm, wildfire, earthquake, et cetera, they're not bespoke to solar or wind installations. So they're not fit for purpose in that way. So VDE, I can't speak to all the scientific stuff on the back end because that's not my area of expertise. But I know that they use historical data from the last 20 plus years or so, and then run Monte Carlo simulations, and however they do their modeling, I'm sure you can look on their website and get more information about the science behind it. But to project into the future for the probable maximum loss estimates for a site, so that we incorporate that modeling into our report, depending on what kind of panel choice or tracker you have, and they provide a range of PMLs depending on stow angle. It's pretty specific. And then I know Jeff has some stuff to say about point number 2, but I'll just jump in real quick while I'm talking and say we are also working on a research project to analyze those null events, those success stories where things hail fell and nothing happened, because nobody talks about that. They only talk about the big losses. And so, the feel in the marketplace is that it's hail just causes these massive losses. And we are working on trying to gather data and then publicize information about null events. So that's something we're working on, separately from our analytic reports.
Yeah, agreed. Null events are treated the same as damage events, and it's not just hail. We've had assets that have come up for renewal that have had losses, fire losses, for instance, on a battery energy storage system, where the asset owner took mitigating action on the on-site with regards to the additional value that was remaining, also and in other sites within the portfolio. But the key there was they had suffered a loss, but what had they done to mitigate that loss going forward, and what were these key factors that they included in the updated submission? That was all taken into account. There are some carriers who have taken a loss on an account and aren't able to move forward on a future property policy. That can happen. It can certainly happen to us as well. But when mitigants are put into place and when there's a clear story around them, the impact was, well, for us at least in this circumstance, we were able to write it, and we were able to write it at actually a very similar price to historical pre-losses. So it is taken into account as the mitigants as well as sort of the success stories.
Thank you, Geoffrey. And with that, we're going to move to our last question. But before that, I see that we also got some questions regarding the underwriting data checklist that KWH has. Just so you know, we will be dropping it right now in the chat. So make sure that you also revise it there. And then our last question is going to be, what are some key issues to be considered when selecting a broker partner?
Yeah, I can take that one, and Lauren, feel free to jump in as well. But for Soul Systems, obviously, like with any service provider, you want to consider cost and services provided. But I think something that we've really appreciated about CAC is the education component to our partnership. Obviously, they're the insurance experts, and for us, it's one of many aspects of the project that we think about each day. And so really they've been really helpful with, educating us, one, just like on the ins and outs of insurance, but also, everything I talked about today, at what stages to think about insurance and during the development stage, what to think about, throughout the whole entire life cycle. So I think that that's something that we found really valuable is just the willingness to teach about insurance and educate us about what's going on in the markets because they also obviously have the relationships with insurers and see that information and can communicate it back to us.
Perfect. Kate, thank you so much. Kate, Lauren, Geoffrey, it was a pleasure to have you here. Thank you so much for participating. And to all our audience, thank you very much for your questions. Just like we mentioned at the beginning of the call, make sure to revise your email. You will be receiving the recording and the slides of this incredible presentation. I'm sure you got a lot of great information as well. But remember that we will be continuing these types of conversations at Solar Plaza's Asset Management North America coming up in April of next year in San Diego. So make sure to let us know if there's anything, any type of commercial or business opportunities that you would like to talk about. We'd be more than happy to look at this over with Solar Plaza as well. And so we wish you all in the US a great rest of the day. To those in Europe, a great rest of the night. Thank you so much. Goodbye, everyone.